Welcome to today's video, how to rebalance portfolio. It's important that we do rebalance our portfolio, our stock market investments, so that we are invested in what we really want to be invested in when we want to be invested in it. So let's dive right in. All right, so what is rebalancing a portfolio? Essentially, you are rebalancing where your investments are. For example, if you want to have a certain percentage in stocks and a certain percentage in bonds, but you have way more in stocks than you want, then you're going to need to rebalance that portfolio so you have your desired percentage in stocks and your desired percentage in bonds. The stock market definitely fluctuates over time, as we have seen recently. So we want to make sure that we are still invested in what's most important to us and that we have the right allocation. The way we keep that in the right allocation is by rebalancing our portfolio. And why is it important to rebalance our portfolio? Well, if we are concerned about our risk management, which we should be, then we want to make sure that we are rebalancing, that we are either reducing our risk or increasing our risk, depending on what our goals are. Another reason rebalancing your portfolio is important is that it helps you not to chase a hot tip or a risky investment, or even having overexposure to certain investment classes or industries. Rebalancing can help you really stay focused on what your overall goal is and help reduce that temptation to getting sidetracked and trying to focus more on the short term and getting quick wins. To give you an example, if you are really close to retirement and you don't want to be super risky with your investments anymore, and you have maybe 80% in stocks and 20% in bonds, and then the stock market just goes crazy and increases a lot, and all of a sudden you now have 90% in stocks and only 10% in bonds, you want to make sure that you are rebalancing your portfolio, that you are either selling some of those stock investments to get you back down to 80% stocks and 20% bonds, or that you are increasing the amount of bonds you are purchasing so that you can build that up and increase your bond percentage. All right, so how exactly do we rebalance our portfolio? First, we have to know exactly what we are invested in our portfolio. We have to know how much we have in stocks and how much we have in bonds, and then know exactly the percentage that we want of each. And then we can make adjustments, we can rebalance. The first way that we can do this is to do a calendar-based rebalancing. So every year, or even every 6 months if you want to, you can have it marked in your calendar, set an actual reminder in your calendar on your phone so you'll actually do it. But you can just say, all right, every June and every December, I rebalance my portfolio. And I've even heard of someone doing this on their wife's birthday, I think, and then maybe his birthday, they were like 6 months apart or something. So just pick something that is going to work for you so you'll actually remember to do it. But that way it is completely scheduled, so it's taking emotion out of things. Because if you're just thinking, oh, I should probably rebalance eventually, but then the stock market starts to tank, you're going to get nervous and may not want to rebalance. But if you just have that scheduled, you know, all right, I'm going to log into my account on this day and make sure that I have 50% in stocks and 50% in bonds, and then I can adjust. I can either sell some stocks to have a little more in bonds or vice versa. The second way that we can do this is by threshold. So this means when your stocks or your bonds reach a certain threshold, you are going to rebalance. So you set this threshold beforehand so that you aren't just going on emotions, right? You have this planned out. For example, if you want to have 70% in stocks, and you all of a sudden see that drop to 65%, that could be your threshold on when you rebalance. So when it hits that 65%, you know, okay, I want to have 70% in stocks, so now is the time for me to rebalance. But you set that threshold amount beforehand, so when it does happen, you are ready to act. And then the third way I want to talk about rebalancing your portfolio is band-based rebalancing. This involves setting upper and lower limits in asset classes for your investments. When your asset class reaches that upper limit, then you are going to sell that and buy some more of a different asset class. So when you are seeing it reach that upper limit or that lower limit, then you are going to rebalance your portfolio. For example, if you have an upper limit of 80% in stocks, and you see that start to go to 90%, then you can log in and sell that investment so that you only have 80%. And then I just want to give you a few tips on how to do this successfully. You definitely want to make sure that you are aware of any costs that may incur when you are buying or selling these investments. So for example, if you're looking at your total portfolio and you have different investment accounts like a Roth IRA, a traditional IRA, a brokerage account, you may want to sell certain investments within the retirement accounts, within the Roth or the traditional, rather than the brokerage account. And this also goes along with the tax implications that may be there, especially with a taxable brokerage account. You're going to pay taxes on those gains when you sell your investment. So you want to make sure that you are holding them for at least a year so that you pay that long-term capital gains tax rate. And I have another video breaking this down a little bit better. I'll leave a link to that above. You can check it out later on. But just make sure that you are looking at your entire portfolio, all of your investment accounts together. Because honestly, you could have all of your bonds in your IRA and all of your stocks in your Roth IRA or something like that. And then you can adjust in different accounts. You don't want to just look at one investment account and adjust there, and then look at the second one, adjust there. You want to look at your full portfolio. And you want to make sure you are rebalancing in regard to your own personal goals and your own risk tolerance. You don't want to be asking your neighbor, oh, well, how much do you have in bonds or how much do you have in stocks? You want to know what your own goals are, what your own risk tolerance is, and then rebalance accordingly. Because if you are really close to retirement and your neighbor is maybe the same age, but she doesn't want to retire for a lot longer, she is going to have a different investment strategy. So you want to make sure yours are aligned with your own goals. And then also just be disciplined with it. If you're doing the calendar rebalancing strategy, then just follow it. Don't change things all of the time. Pick a strategy that works for you and be disciplined. And then also don't make decisions based on your emotions alone. If you are really nervous about the stock market and you start to rebalance, but the stock market comes back up, then you're going to have to rebalance again. So just make sure you have your strategy in place and you follow it, and don't become emotional about your investments. And I do want to add that some people really try to complicate this, and not on purpose, but they probably have a lot of different investments inside of their investment accounts. So they could have a number of individual stocks, a number of index funds or ETFs or REITs, lots of different investments, and it can become very confusing and overwhelming when they're trying to rebalance. So just go back to what is your ultimate goal? What's your long-term goal? And what is your risk tolerance? And then also, what are your beliefs around these investments? Do you think that REITs are going to outperform just a US total stock market index fund? Then you may want to have more in REITs, right? So you need to have your own investing strategy set up and then follow that accordingly so we aren't making our decisions based on emotions. And also, I like keeping things very, very simple. That has worked for me. I invest in one main index fund and then I have about 10 individual stocks. And that way I'm keeping it very, very simple. So if I start to think that a company is not doing as well anymore, then I can just get rid of that individual company and put it in the index fund. That's going to be something very simple I can do. Or if I think a company is doing really, really well, then I can add to that company. For example, and I'm not saying that this company is the best and everyone should invest in it, but for example, Amazon. Maybe I feel like, oh, that's going to outperform my index fund. So I want to put more money in Amazon. So I'm going to possibly sell another stock that I don't think is going to perform as well and just put that money into Amazon. And that's kind of my rebalancing. But I'm not rebalancing in regard to stocks versus bonds because I don't have any bonds. And when I'm ready to add bonds to my portfolio, I will just pick a bond fund. And that way I don't have to worry about rebalancing a number of different individual bonds. I just like keeping it very simple because that works for me right now and it's going to be even more simple in the future. And if you want help investing in the stock market, I have a free masterclass going over how I can help you invest in the stock market very, very simply and even automate your investing so you wouldn't have to think about this over the years. I will leave a link to that below in the description and you can click on that and watch the free masterclass. All right, comment below and tell me your rebalancing strategy. I'm curious to know. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel and hit the little bell to get notified on when I post new videos. And if you want to see even more amazing content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.